Hey there guys, my name is Marcus, and in this video I'm going to compare two popular ETFs, QQQ with ARKK or ARK Innovation ETF. Now, if you have your own opinion on these two ETFs, write it down below in the comments. I'll be really excited to hear your opinion on it. And also, if you have other ETFs that you would like me to compare, I would gladly make a video on it. Please share it down below. Also, I created a course in which I'm showing you how you can make money with ETFs, what are some good strategies, some fundamentals, or how you can understand ETFs better. You will find it in the description in link. So let's start and let me show you all the important details you need to know when we compare QQQ with ARKK, ARK Innovation ETFs. So of course the issuer is different, Invesco comparing to ARK. Now also I prepared for you not only the expense ratio, holdings, but some Reddit comments which I think are really important to know. Expense ratio, this is the first thing that QQQ is winning comparing to ARK. You see that expense ratio is 0.75 in ARK Innovation ETF. Comparing to QQQ, it's an expense ratio of 0.20, much lower. Also, the assets under management are lower in ARK comparing to QQQ. Number of holdings, now underlying index, you see that. The underlying index for QQQ is a 100 index non-financial stocks. That can be changing. Right now, they're mostly technology. So therefore, QQQ is mostly about technology stocks. When we come here and consumer cyclicals, 64% on technology. Comparing to ARK, you don't see any index because it's active management fund, if I could say it like that. And what does it mean is it's a disruptive ETF. So when you're going to see the holdings that I'm going to show you, you will know exactly what I'm talking about. Now, as I mentioned, the expense ratio is much higher on ARK. And now let's look together on performance. This is really exciting. So you see right here for the first month, 7.7%. ARK was winning. 3 months, ARK was losing. Now, last year, when we compare it right here, look at this. ARK was outperforming really huge QQQ. 3 years, 2 also, and 5 years too, comparing to QQQ. But it's like when you check the QQQ here and the performance of QQQ for the last 5 years, look at the growth here. When you check on ARK in 5 years, you see it's a little bit different, the growth here, because it's active management fund. And right now it's stabilizing, but QQQ, look at this. The growth is crazy. In my opinion, this is just my perspective. I don't want to say what you should do with your money, but going ARK long term, I don't know about that. Like I invest to ARK fintech ETF to the finance. I like that, but I don't really invest into ARKK because I like choosing like individual stocks by myself. But that's what I do. Maybe your strategy is different. Now, that's something what you should definitely think about. And the performance was huge here for ARK. So if you'd be like investing, I don't know, what was that? In March, it will grow so much, right? So also what I want to show you now is the holdings and the categories. So you see right here for QQQ, it's mostly technology. Because the 100 top 100 companies are mostly technology, 62% in Nasdaq. Now when we go even further, you see that the top 10 weightings, Microsoft Corporation, Apple, Amazon, and this is what 29% combined, these 3 companies. And you see right here, so we see the total top weightings for ARKK, Tesla, 11, Teladoc, Coinbase Global, Roku, Unity Software, Zoom Video Communication. So you can even say that it's like kind of all over the place, and these are all popular stocks. Like I have Tesla, Teladoc I don't have, I have Roku, I have Unity, I have Square, Spotify, Shopify, and I even think that I have Zillow. So no, I don't have Zillow anymore. So I invest into these stocks individually. But as you can see, it's kind of like completely overpriced and it's different comparing to Invesco QQQ. Now, even when you come here, you can see clearly the holdings, and I can just get full holdings PDF here for ARK. But it's not working for some reason. So let's check it out again. Here it is. So look at this. And it's always changing, right? So you see Tesla, Teladoc, Coinbase, Roku, Zoom, Twilio, Twitter. But like you don't see Amazon here. You don't see Microsoft here. It's primarily disruptive. And I'm going to read you some comments which I really liked. And look at this. ARK, on the other hand, is specifically geared towards disruptive companies. It's specifically designed for companies that have potential to disrupt their respective industry and is spread out among small, mid, and large cap. As we've seen this year, it has a huge potential to break out. It also had a great year in 2017. So the thing about ARK is that it has some of the hugest growth potential on any ETFs, but there will be certain periods of slow growth. Yep, and this is probably it. And now, so for me personally, if you want to long-term hold as a core position in portfolio, I think QQQ is more suitable. For your purposes, adding 60%, blah, blah, blah. Whatever. ARK is not a bad fund, but in an active fund. I own some shares of it. Of course, it has higher expensive ratio. So this is like completely up to you which one you would like to invest to. And yep, and they're all in tech growth stocks. And now you're potentially throwing away guaranteed returns from the market with bets on speculative stocks with ARKK. And look at this, this is a good comment. Between ARK and QQQ, you might choose ARK simply because it's a strategic and structural bet, whereas QQQ is just a grab bag of whatever happens to be the top 100 growth stocks trading on the Nasdaq. On the other hand, with QQQ, you are getting whatever the market has decided are the top stocks in the Nasdaq 100, which is the kind of Darwinian beauty of passive indexing, and you're paying a very low fee to participate comparing to ARK. So these are the main differences to summarize it. Expense ratio is higher in ARKK. Also, the assets is a disruptive fund. I would say the ARK Innovation ETF that is like trying to find companies which can disrupt the market, and then the whole fund would rise. Comparing to QQQ, it just like copies what the market decides is the best on a market of 100 companies which are not finance. Primarily, they are right now technological. So this is something to think about too. And yeah, that's pretty much it. So if you're gonna have any questions, guys, ask me down in comments. Happy to help you. Definitely check the course down below in the description, which I teach how we can make more money on ETFs. What are some good strategies, some good ETFs to invest to, long-term, short-term, yada yada. So thank you very much, guys, for watching, and have a great day, and goodbye. See ya.